Hello, everybody. Ed Yardeni here. I don't know if this is a technical difficulty, but you now get a nice, big, broad picture of my office. The little controller I have for narrowing the scope of what we're looking at isn't operating. So, but then again, that's life, right? Things don't always work out. Look, lots to talk about. Clearly, I'm not going to talk about the weather. Well, I might as well. It's not. We've got rain here and rain all week, so it's going to be a dismal week. Maybe it won't be so dismal in the stock market. Maybe we're trying to come up with some bottom here in the market, but the market had a nice little, pretty dramatic rally, like about half an hour ago on some news that perhaps the administration was considering a 90-day freeze or postponement of tariffs while negotiations are going on. I think that's certainly still one of the ways that this market could bottom here and do better. There's got to be a tremendous amount of pressure on the administration coming from congressional Republicans. They have to realize that the way things are going, the longer that the tariffs issue remains in place, the more the market stays down, even if it doesn't go further down, but just stays down, the more they're going to hear from their constituencies that they're not happy. I know that Treasury Secretary Scott Bessent has tried to say that, well, the stock market doesn't matter that much. A small percentage of Americans own stock. More important is that interest rates have come down, gasoline prices have come down, and that's benefiting more Americans. I mean, I think that's half right, and that's definitely half wrong. I mean, there's clearly lots of people that are in the market. Gallup shows that 60% of Americans are in the market one way or the other, either directly or indirectly through IRAs, mutual funds, or just direct holdings of stocks. So Americans are very much exposed to the market. As a matter of fact, I think something like 45% of their financial assets are now in equities. That's an all-time record high. Benefit of hindsight, we can look at that as a contrary indicator when everybody's kind of in the market. That in the benefit of hindsight turned out to be a contrary indicator. But then again, the events that led to this correction bear market we're in right now had to do with a big policy error that nobody really anticipated. The market, I think, had this calm feeling that April 2nd, so-called Liberation Day, would kind of resolve all the uncertainty, and we might make a bottom on that news. We weren't in that camp, but we were kind of hoping that would be correct, but it wasn't correct. I think the market, I mean, who knows, but I think the market was anticipating something like maybe a 10% average tariff once the administration came up with its tariff announcements on April 2nd. Instead, it's turned out to be on average something like 25%. And so it was a shocker. It was much bigger numbers. And of course, we all know that the numbers that they came up with are totally and completely bogus. They had some sort of cockamamie formula based on deficits rather than on tariffs. I guess they just couldn't be bothered doing the homework, or maybe you can't really do the work. The idea is, okay, so what's a country charging us in a tariff? What are they doing in terms of non-tariff barriers? How do you actually put a number on non-tariff barriers and add that to an actual numerical statistical tariff? So they couldn't do that. So they came up with some other kind of crazy way of doing it. And then just to show how nice they were, they cut it in half. I think if they divided by 4 instead of by 2, the stock market would have been less in shock. Nevertheless, this whole tariff thing is out of hand. Tariffs, at the end of the day, simply are a tax. They are a tax on Americans. They're not a tax on anybody else. The idea that foreigners are going to be paying the tax is ludicrous. The tax is paid, the checks has to be written by the importers. That check goes to the government. That's the revenues collected by the government. Then the importers have to decide whether they can pass it on to their consumers. And they're obviously going to try. Otherwise, it's going to squeeze their profit margin. And if it squeezes their profit margins, then they're going to hunker down and cut costs elsewhere, which means probably firing some employees, cutting back on capital spending. So from that perspective, it doesn't really make much sense. And of course, the administration has been talking about raising $600 billion from import duties. Again, that makes no sense because aren't we actually trying to reduce our imports significantly, or at least level them out with exports? So that's if you raise tariffs, you're going to get some cutting back of imports. The other thing is $600 billion is a huge tax increase. If you view tariffs as a tax, it's a huge tax increase. Corporate profits, I think, are around 450 to $500 billion at an annual rate. So you're talking about a dramatic increase in the cost burden of taxation to corporations that import. And I guess everybody, one way or another, imports something. So that's not a good idea. The idea that this is going to bring back manufacturing, well, it might, but it could have been done in a kinder, gentler way. I mean, without getting political about it, Biden came up with his CHIPS Act. And so the government did manage to use carrots rather than sticks to get companies to build production here. But I think given the America economy's excellence over the past several years, and it wasn't too long ago that people were commenting about the exceptionalism of the American economy. It's still exceptional in my mind, but it can also be it can be made unexceptional, but with this kind of harebrained policy on tariffs. But if we bring back a lot of manufacturing, it's not going to bring back a lot of manufacturing jobs. It's going to bring a lot of robots, and maybe Elon Musk's Tesla will produce some of those humanoid robots. But a lot of the robots are made in South Korea, they're made in Japan, and that's just something that we're not doing in a on scale in this country. So we still have to buy all that stuff. The Construction Put in Place series that comes out monthly has a series for manufacturing facilities, and that has gone absolutely skywards to the moon. But that's just building the manufacturing structures. It doesn't include all the equipment, robotics, automation that one has to put in there. So even though we're bringing manufacturing back here, just equipping, putting the equipment into these manufacturing facilities that will make them operational entails a lot of imports. Otherwise, we're just going to have empty shells waiting for the robotics industry to become significant enough here so that we don't have to buy from overseas. Anyways, this whole idea of mercantilism that the deficits are bad and surpluses are good, I think kind of is so mercantilist that it's so yesterday to say the least. I mean, we've had centuries of economists and experience that on balance, free trade is a good thing. Now, of course, it's not perfectly free, and it's absolutely true that maybe Peter Navarro was early on and kind of blowing the whistle on China, and everybody else has come around to recognizing that China doesn't play fair. So the concentration on China that Trump started and Biden continued is a reasonable one, but to take on the whole world just doesn't make any sense. So what are we seeing? We're seeing our stock market taking a dive. The S&P 500 is somewhere on the verge of going from a correction to a bear market. The stock market vigilantes are clearly screaming that they are mad as hell and want the administration to cut it out or at least postpone for 90 days while negotiations go on. But the administration seems to be very confused about what they want to do with tariffs. They want to raise $600 billion. They want to use tariffs to force companies to produce here. Well, those are permanent tariffs. If you're going to negotiate, then you're obviously the implication is that you want to bring the tariffs down on a negotiated basis. So a lot of confusion, and I think they kind of created a tariff structure that would allow them to do both. The 10% tariff would bring in something like $300 billion if there aren't responses to that, like cutting back on imports. Um, and the reciprocal tariffs could be negotiated down to zero. And I think one of the reasons the market has improved wasn't just because there was some fake news apparently that the administration is considering a 90-day freeze, but the Europeans actually stated that they really would like to negotiate this situation and bring tariff rates down. So, Trump really does have an exit ramp here if he wants to take it. We saw it in the market half an hour, 45 minutes ago. Just declare that you're going to do a 90-day freeze, and you have all these countries begging you to negotiate a deal, negotiate deals, declare victory, and move on to other things. By the way, some administration officials are saying, well, this isn't going to be recessionary because we're already working on tax cuts, the big, beautiful bill, the big tax cuts. That is absolutely nonsense. It's not tax cuts. It's an extension of the 2017 tax cuts. The corporate tax rate was cut and it's permanent. It's not going to be raised. Maybe it could be lowered, but it's not going to be raised. It's the consumer, it's the household, the individual tax rates that end at the end of this year, and they're the ones that have to be extended. If they're not extended, then in effect it's going to be a big tax increase, and as much as $600 billion. And so talk about fiscal drag: $600 billion from tariffs and $600 billion on consumers if they don't extend the tax cuts that were implemented in 2017. There's talk about fake news. There's just a lot of distorted news and commentary on all these issues, and it's got everybody kind of confused. They don't. I mean, I think we really don't know whether this is all just kind of the way Trump plays the art of the deal and its negotiations, and it's throwing the other side off. The problem is he's throwing everybody off, and he's certainly thrown everybody off with his bluster that he doesn't really care about the stock market. And of course, Besant and a few others have said that this is all aimed at helping the people on Main Street. Wall Street's done well. They'll do fine. Don't worry about it. But as I've written over the past couple of days, Wall Street and Main Street are tied at the hip. They're one and the same. Main Street owns a tremendous amount of equities. Something like $50 trillion is what the household sector owns. The baby boomers own about half that. The baby boomers, I think, have been accounting for the strength, the resilience of consumer spending. A lot of them were taken, retired, and they went on cruise ships. Let me just shut this thing off. I've got too much technology going on here. I put my phone on the PC, so now when somebody calls me on the phone, it also goes on the PC. So I got to figure out how to stop all that. But anyways, let's go on. So I got friends that are taking cruise ships around the world, around the Caribbeans. One of my cousins, who's my age and kind of looks like me, or I look like him, flew over to Japan, and they did a nice Regency cruise around Japan, and they enjoyed themselves. But he relayed to me that this time around he wasn't having that much fun on the cruise because he kept looking on his cell phone to see how his stock portfolio was going, and he was kind of getting. He wasn't seasick, but he doesn't get seasick, but he was getting sick from what he saw going on in the market. Whereas in previous cruises, it was great. He went on the cruise and he looked at this cell phone, and his stock portfolio was going up and up and up. So what a way to retire, right? Retire, and instead of having whatever you're spending is being replenished, if you will, by the stock market going up. Now it's going the exact opposite way. And as you know, for the past 3 years, we've been arguing that one of the reasons the economy is resilient is because baby boomers are retiring and they're spending. And we predicted and still predict that the savings rate will probably go negative, because when you have a lot of people that had pretty good jobs that are retiring, so they're not getting any income anymore. So what are they living on? Well, if they're lucky, they got a lot of dividend and interest income. And if not so, they start dipping into the assets that they've accumulated. And now we got the kind of flip side of that, and that is the negative wealth effect. Instead of a positive wealth effect, we've got a negative wealth effect, and that has to be concerning. The administration claims that their goal isn't to cause a recession here. And as I wrote, there's a conspiracy theory that that's exactly what they want to do. A recession would bring interest rates down. Check, that's happening. A recession would bring oil prices down and other commodity prices. Check, that's happening. But as I noted in my write-up, the problem with that analysis is during the Great Depression, interest rates went down, commodity prices went down, and stock prices crashed. So for Besant to say, well, our policies, they may create a recession, but meanwhile they're really beneficial to lower income people, middle class people, because they're bringing interest rates down and gasoline prices down. That's going to be a sorry story if, in fact, it starts to also lead to more unemployment, and that's a real possibility. Now, I'm kind of holding off. I mean, we did, I think, on a fairly timely basis, not as timely as I would have liked, lowered our expectations for the S&P 500 by year end. We're now down to 6,000. And obviously that looks like very optimistic. We'd all love to see the market back at the 6,000. I raised our odds of a recession from 20% to 35%, from 35% to 45%. And now we've got poly markets saying that trading market showing 60% probability of a recession. And we're going to wait a little bit more. I mean, if we get something like a 90-day freeze on these tariffs, that obviously would turn things around pretty rapidly. Another possibility here, which is maybe the more likely scenario, is I do think we're going to get Republicans just screaming at the White House to stop this, or else they're going to lose the midterms, and they will lose the midterms if they don't stop it. As Ackman said today, we didn't vote to have our portfolios ripped up like this. And so anybody who voted for Trump's not feeling too good if they happen to own some equities. But a more likely possibility, perhaps, and I'm no lawyer, is that there's already one court case that's been filed about testing the constitutionality of declaring an emergency. The question is, what's the emergency? Well, I mean, fentanyl, if it's fentanyl, then it's basically you focus on Mexico and Canada. You don't focus on the entire world. And the whole thing, by the way, was kind of ludicrous when it was discovered that there's an island somewhere that's got penguins on it that is facing a tariff, and there's no humans there. I mean, it would be funny if it wasn't pathetic. So that's kind of where we are with the possible changes on the administration views. It's also possible that the market, at least on the short term basis, we'll actually find a bottom here. I mean, it's discounted a heck of a lot of bad news, and maybe as we get into earnings seasons, we'll see that the earnings reports for the first quarter aren't all that bad. Guidance is going to be terrible, uh, but a lot of things can change along the way for the better, and I think they will. I think when you look at the fact that not only do we have the stock market taking a dive here, but around the world, it's putting pressure on every policymaker that needs to have to get votes to get reelected or to get elected. It needs every policymaker to really try to focus on putting this issue behind us. And so I think the Europeans are clearly not happy with what they're seeing happening to their stock market. So that's kind of where I'm thinking. Let's look at some slides and then open it up for some discussion. Let's see. Yeah, I think most of you know Eric is taking a leave of absence. He's going to join the administration, the Council of Economics Advisors. He's going to work for Mirren. Apparently, he knows Mirren from his days as a Wall Street Journal reporter. So all we can do is hope that Eric makes a difference there. But I think some of Trump's advisors just simply have to go. I mean, Navarro is just going down a trail that we shouldn't be going down. Okay, so stock market as of Friday, obviously a really ugly chart. Same thing for the Nasdaq. Just very amateur lines showing some support and resistance areas here for the market. There's still quite a debate on whether the Fed might come in and save the day. I think Powell made it fairly clear that he's in no hurry to do so. They're still talking about they're in no hurry to lower rates, so they're still dovish. So haven't started to think about the possibility that tariffs will lead to higher inflation. They kind of view that inflation as being transitory, but they could be in a real dilemma here if they start to see the unemployment rate going up and inflation going up. They'll have to kind of decide what do they do about that. I think they will have to choose sides on trying to keep the inflation rate from going up, simply for their credibility's sake. But we'll see how that call goes. But right now the market's expecting about 2 to 3 rate cuts over the next. What do I have it here? I think it's the next 6 months. Over the next. What can I see it here? Oh yeah, over the next 6 months. Sorry about that. But you can see the market can change its mind quite a bit. This is the futures market. Over the next 12 months, the market's expecting 4 to 5 rate cuts. We're still in the none and done camp, but we're not going to be there for very long. I mean, if these tariff issues if we don't get some relief on the tariff issue soon, there's a real possibility that something will break in the credit system. We're watching credit spreads and some other areas of the credit markets that might start to show some stress. And if that happens, the Fed, I think, for the sake of financial stability, would in fact intervene, and that might make a bottom a Fed put. But I don't know. It may just make a bottom. It may not make a V-shaped bottom. Meanwhile, oil is telling us that the global economy's outlook is looking diminished. The inflation question, energy prices may continue to go down, which will be helpful on the inflation side. Bond yields are going down as Bessent has bragged that he's accomplished that. Let me see where I want to go here. I want to go here to the wealth effect. As you can see, there's a tremendous amount of wealth in U.S. equities, $92.9 trillion in equities that are traded in the U.S. Stock market. The S&P 500 at the end of last year was up around $50 trillion. A lot of money, record highs at the end of last year. And this just shows who owns all those equities. And you can see that the household sector has $37.7 trillion. That's directly held, but they also hold through mutual funds. They also hold through institutional investors. This is the household sector's holding of corporate equities and mutual funds. And as you can see, the baby boomers own half of that. So the total is almost $50 trillion by the household sector and the including the equity mutual funds. And then the baby boomers have about half of that. And they're retiring. And then I just told you the story about my cousin going on cruise ships who's not very happy and may cut back on his cruising around. Baby boomers own the more than half of equities and so on. So here's the IRA's all-time record high at the end of last year, at the end of the third quarter, I should say, $15 trillion. And then this is a chart that has been shown as a contrary indicator. Turned out that it looks like it's worked pretty well, and that is something like 43% of the financial assets of the household and nonprofit organizations is at the end of last year was in equities. The point of it in the current situation is that means that there can be a pretty large negative wealth effect, which would push us into a recession. And here's the poly markets. It's on the internet. It's available daily. And as you can see, we're up to 60% betting that a recession is coming. Meanwhile, it's all kind of a pity, right? Why take a wrecking ball to an economy that was performing so nicely? Total non-farm payroll employment rose very significantly. Eric and I had been arguing that the cold weather in January and February, colder than usual, was keeping a lid on things. And so we had a nice bounce back. We expect a nice bounce back in retail sales. You have aggregate weekly hours, which reflects payroll, employment, and the length of the work week, all-time record high. People are buying cars. You can see there's a big jump in cars. We can have a really bizarre scenario where the first quarter could be up like 0.5 to 1%. And then the second quarter could be up like 2.5 to 3% because people rush to buy cars and other and appliances and things like that before the tariffs affect the prices. And then things could really peter out the second half of the year. I think that's the JP Morgan scenario. They see a recession in the second half of the year. We're not there yet, but the way things are going, it won't be long before we're there. So managed to talk quite a bit. Let me put on my other glasses here so I can see some of the questions. Let's see, Joe, Ed, why wouldn't the foreign supplier eat some of the tariff? It's possible, but how many of them are going to do that? There's really no way to know. We don't have any experience with this, but the answer I think is the checks would have to be written by Walmart and for what they import, and then they write that check to the IRS, to the External Revenue Service, and then Walmart has to negotiate with its vendors in China or elsewhere to come up with lower prices. I mean, they're already negotiated lower prices. Presumably, they're very aggressive at that. So I'm not sure that in other words, the idea that foreigners are going to pay the tax and that the deficit's going to come down because we're going to get all this money from foreigners through the External Revenue Service. I don't buy it. Willem, U.S. corporate profits were 3.3 trillion in 2024. Yeah, I mean, no, I didn't mean corporate profits, Willem. I meant corporate profits taxes. In other words, corporate profit taxes running around $450 billion. And so when I'm comparing the tariff revenues that the government is extrapolating, that the administration is extrapolating, they're talking about $600 billion. So I was just saying that the 600, if you view the tariff as a tax, and the tax mostly paid by Americans, and a lot of that tax is the initial checks are written by corporations, that's bigger than what they're paying in corporate taxes right now. That's what I meant. Uh, Michael said, great summary, Ed. Thank you. John says, has the height of stupidity of this Trump tariff situation not hurt the economy for the long term in our market? The question marks are both. If Trump can do this, what else might he do? Have not guardrails failed and now surely might again? Well, I'm hoping that the system of checks and balances kicks in here. Can't kick in fast enough for me or for the stock market. But the idea is, I think, at the end of the day, it may very well be up to the courts to decide. I think there's a conservative group that funds legal actions to defend conservative principles. That's behind a court case of a stationery store that's suing the Trump administration because they obviously import a lot of stationary goods from China and other places. So they're challenging the constitutionality of what Trump is doing. I mean, it is just insane. You got an administration that wants to be pro-business or claims to be pro-business, that claims to be, want freedom. They believe in the free market and all that. And look what they're doing. I mean, just kind of forcing everybody to change the way they do business and to change their cost structure and to eat into profits. It's just it is stupidity. It could have been done a much more civilized way, if I might say so. Lee, never attribute to slyness what can more easily be explained as stupidity. Okay, we're learning a lot of principles for life. Maybe Ray Dalio will write about these principles in his book. Anonymous, Trump just tweeted that he is going to increase China tariffs by another 50%. Are you sure he is a rational player in this whole thing? Well, you're anonymous, and if that's fake news, then that's one thing. But man, if that just happened, that's insanity. That's the definition of insanity, doing more and more of that stuff. Well, I won't get into something. Yeah, when on CNBC they had a Dan, I forget his last name, very well-known tech guy, and he was saying that if these tariffs persist, that's just going to destroy the technology sector in America. Chip, absent inflation and potential attending recession, YRI has had a 1225 6,000 SPX target. How about a YRI floor base? Yeah, we actually did. So 5,100 as the kind of the new range is the bottom of the floor. If you take a look at our, we wrote that. I wrote it up in the quick takes, and we also so we have been doing high and low targets, and the low was 51. So the way things are going, especially if that 50% story is accurate, I have to reconsider how low is low. I'm having fun. If you don't mind hanging around a few more minutes, I'll do a few more questions. Do you think the 10-year rate should be 4.25 to 4.74? Yeah, actually, we lowered that, to 3.75% to 4.25% as a result of recent events. That's too high, and we've lowered it. Kevin, per CNBC, Trump just threatened additional tariffs on China. Okay, so we're talking about threats. The guy is it's frustrating. I think we kind of covered it. I'm looking at some of these other things. Willem said, thanks for clarifying. So now we're on the same page on that. All right, folks, what can I tell you? Try to stay sane. Not easy in this kind of environment. Try to stay calm. Not easy in this environment. I'm still betting that the U.S. economy will get through this. I'm still betting that our political system has some checks and balances that will check well, let's call it insanity for what it is. There are sane ways of doing this, and the stock market indicated one obvious sane way is a 90-day freeze on tariffs and just negotiate. But this mercantilist idea that we want to go back to the 1900s, or that the America was wealthy when we had tariffs and we want to get wealthy again, well, we're all feeling poorer again. We're not feeling wealthier again. So call your congressional representatives if you're not happy with the way things are going, especially the Republicans, and tell them they're going to get wiped out in the midterms if they don't get some sanity going on this tariff issue and move on from there. All the best to all of you. Thank you.